Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman down below so you can follow along with Erik's work. Erik, great to get you back on the KE Report. As you've been out traveling the world, you were just at a conference in Majorca, Spain, and this was the Atlantic One Investment Summit 2025. So again, another mining event in a good location to also unwind a little bit. But you had a full schedule of meetings and networking with different companies and investors. I guess just in a general sense, what was your main takeaway from this conference, the Atlantic One Investment Summit?
The conference was absolutely great. The setting was absolutely great, and they had a bit of a different approach. There weren't really one-on-one meetings per se. It was more like 12 companies invited, and they got a whole hour basically to have a roundtable presentation slash discussion. So they could really, dig into their stories, and everyone could ask questions as well, and everyone else got to hear the questions and the answers to those questions. So I think it's a interesting twist where it's like, some investors might come up with questions that you haven't thought about really, and then you hear the response to said questions. So I think it was, yeah, really interesting from that standpoint. And there was, times to or opportunities to mingle and, follow up, etc. But I really actually enjoyed that format as an investor, and you also get a sense like, what other investors see in those cases or what they're focusing on, and it's like, how close is your own priorities in terms of due diligence, how close is that to some other people, what are they putting an emphasis on, etc. Because in a sense, that tells you something of, they're part of Mr. Market as well. So I found it kind of refreshing in a sense to be somewhat part of the due diligence process coming from other people, and again, get a sense of what other people thought was important and maybe not for some companies.
Yeah, it's an interesting idea because I'm sure a lot of one-on-ones people end up asking the same questions over and over again and they could just answer it one time. But then there are different questions that are unique to one investor or another, and it'd be nice for the group to hear the answer to those questions and also just how other investors think and do their due diligence. Well, I think there's a couple companies from the event that you're still digging into a little bit further. One of the ones we were talking about off mic is Heliostar Metals, traded on the TSXV under the ticker HSTR. Now, that's a company that we bring on the KE report quite often. They're a sponsor of the show, and it's also a company I hold in my own portfolio in full disclosure. But you were just digging into Heliostar for the first time at this conference and meeting with Charles Funk. So, just your initial takeaway from Heliostar.
Yeah, I watched Heliostar go up in price, and I remember seeing the deal done by, I guess it was via Alamos, spinning out the Argonaut assets. So I never really felt that early because I didn't take time at the time of the announcement to actually dig into it, kind of like Discovery Silver, for example. So I was actually interested to see, okay, is there an angle here, or is it kind of well known and priced in, let's say, what they want to do, what assets they have, what the quality of those assets are, etc. But I was impressed by Charles Funk because he spoke kind of like, a geologist CEO, and he had a very, in my opinion, investor-friendly approach in a sense that, they, not only him, I guess, but the whole team, that they have a pretty good vision how to basically, let's say, unlock this pipeline of projects they have for the least amount of dilution, let's say, and how one or two projects or three projects might feed into the next project up in the pipeline and all that. So, I have to do some more due diligence, but the overall takeaway was that, yeah, I was impressed by their vision basically, and it spoke to me very much as a long-term focused investor, that I can see them having a longer term game plan that makes a lot of sense. And if they would execute on that the vision as they see it, then I would not be surprised to see the share price being higher from today going into, let's say, 3 years from now or something.
Well, with Heliostar, it reminds me a lot of the discussions that we've had about Magna and Integra, where both those companies were junior explorers with good development projects, but the market was not sure how they were going to keep raising capital and how they were going to move their development projects forward. And in both the case of Magna and Integra, they went out and bought producing assets that looked like really smart transactions. Now, that's the same thing Heliostar did. They did the exact same model where Ana Paula is their big development project. They also have Cerro de Gallo and San Antonio kind of waiting in the wings down the road, but they're using their La Colorado and San Agustin mines that they picked off from Florida Canyon when that was spun out of Argonaut to fund the company just like Magna, just like Integra. So did that attract you to the business model at all, that same kind of format?
Yes, yes, basically. And also, I mean, just to hear some more information on, let's say, the producing assets that they believe, there's more exploration potential, et cetera, et cetera. And I mean, personally, I like these kind of multi-asset plays, as you well know, because usually the market has a very hard time keeping a lot of factors in the front of its mind at all times. So my takeaway was kind of that, okay, you're getting a lot at face value, some of the parts, let's say, which I don't think is really reflected. And also some of those parts, I should say, in turn have also, some inferred upside in them as well. So I think certainly that, I mean, I don't think this market cap is really factoring in for the synergies and not only, and not even the, let's say, some of the parts to begin with, and then also the potential value in some of these assets. So I think there's a bunch of angles in a sense within this case that's not really maybe reflected in the market cap. Again, I have to dig deeper, but that was my impression when I, sat through the presentation and talked a bit with Charles afterwards. So I simply think it's, as you say, kind of reminds me of Magna, kind of reminds me of, Integra, for example, where, okay, the market might not give much credit for some of these, peripheral assets, etc. And if they couldn't monetize them in any way, shape, or form, then the market could just keep not caring about it. But they actually have, a game plan of monetizing them. So I mean, if the market watches, whatever, free cash flow, etc. I mean, if they make this work in a few years, the free cash flow could be materially higher than where it is today. So then the market has kind of no choice but to price that in, because a producer's probably not going to trade at the same price or market cap as it did when it had, let's say, 70% less production, for example.
That's a good point. I mean, first of all, producers get a different NPV rating metric typically, and if they can go from a small producer to a mid-sized producer over the fullness of time, then that'll increase their valuation metrics even more because they'll get a higher production profile. So definitely a name we'll keep following along with here at the KE Report. And another company we've talked about before, Erik, that was at the conference is Amex Exploration. Now, on May 21st, they came out to the market with an update to their resource. And so now they have 1.615 million ounces of measured and indicated, and also another 698,000 ounces of inferred. So about 2.3 million ounces of gold in all categories now. And so you're able to get an update from Amex while you were at the conference. What's your main takeaway after sitting down with the management team?
I mean, first of all, the resource, I mean, the overall endowment jumped obviously quite a bit, but more importantly, perhaps, I mean, the Champagne zone, formerly known as the high grade zone, that jumped to 831,000 ounces of M&I with a 16.2 grams per ton grade. So I mean, that is just remarkable. I mean, where do you see that? Like 8 grams per ton is very high grade gold. This is 16.2. I mean, it's like a miniature version of some very well-known high-grade deposits. So, I mean, I remember the previous PEA, the payback, IRR, etc., at anywhere close to these gold prices. I think they had it capped at like $2,600 gold or something. And then it was, I think the payback was around a year or something. So with 16 grams per ton, for example, assuming again this translates into an actual mining scenario, I don't know how short the time frame would be or the payback would be for that. And it's like the margins, the former ASIC was like, I think $800, a bit higher than that maybe, if they bumped the grade by a significant margin. What does that happen to the ASIC in the first, let's say, 5 years? Because I assume they would be, as in the previous PA, assuming to be mining the highest grade stuff first, because that's typically what you do. So you get the capital back, etc. So I just think this is right now, I mean, looks to be a unique kind of deposit in a sense. I mean, it's not the largest, and all of it is not, 16 grams per ton, but I gotta imagine that, I mean, I don't know how you can get much lower risk project in a sense than this, because it's in Quebec, Canada, good infrastructure and all that, obscenely high grade with like 800,000 ounces. So, I mean, if you put that into production and you assume that, yeah, the payback period might be less than 1 year at these gold prices, and it could survive, obviously, or should be able to survive much lower gold prices. I mean, I don't see how, unless there's something for some reason like very wrong with this, let's say, resource, I don't see how this does not become a mine, and I don't see what mining company, at least mid-tiers, let's say, wouldn't want to, own an asset like this, because at face value, it's kind of, I mean, almost as, I guess, as low risk as you can get.
Yeah, now that they have the updated resource, they can update the economics on it again. So it's just going to be a perpetual cycle of de-risking. So nice to see it jumping up in categories. Yeah, that high grade zone and that Champagne zone really is impressive, and it'll be interesting to see how that feeds into the updated economics as they put those out to the market. One other company that you met with there that we've had on the show quite a bit. Again, it's a KER sponsor and also something in my own portfolio, Blackrock Silver. But you had a chance to sit down with Andrew Pollard from Blackrock Silver, traded on the TSXV under the ticker BRC. What was your initial takeaway after looking over the Blackrock Silver opportunity?
Yeah, I've been a shareholder for some time in BlackRock, and not been a huge position. And I find it very hard to find good silver stories. But in this case, I mean, again, I already knew about it, but just to, like we talked about, I think it was last episode, the merit of getting, you know, a refresher of a case, let's say, because as time goes by, you kind of forget why you bought it in the first place, let's say. But I would say this is, in a way, kind of like reminds me of Amex, actually. It's like in Nevada, so jurisdictional wise, it doesn't get much better than this. And it's also remarkably high grade silver gold deposit. So the payback, I mean, you can look at the PA numbers, like high after tax IRR at much lower gold and silver prices. Initial capex is also quite small. Margins are expected to be high with like $12 ASIC, and it looks like it can grow because they have hit some mineralization when they've stepped out, I think up to like in total maybe 1.5 kilometers. So I would assume that this is also gonna grow. And I don't like necessarily to bet on optionality plays, let's say. So if you have one of the highest grade silver deposits with these kind of PA metrics, I mean, it's almost not irrelevant, but it's like if and gold goes down, it still looks very solid. If it goes up, I mean, or stays at these prices, it's just going to be worth that much more. And it appears they wouldn't cost too much to get it into production. So it's like looking around. I mean, we talked about this before. Most of the high grade single asset silver producers, I mean, they're getting bought up. So, I mean, how many high grade, potentially a high margin silver assets are there left? Not many. And this is also gold and silver, it's not silver, zinc, and lead. So I think that appeals a bit more to the precious metal bulls. And it's in a very famous district, which is the Tonopah district, which have been mined for, I mean, I guess hundreds of years ago now, but there looks to be a lot left. So I just put them kind of in the category where it's like, okay, if you look at the market cap, that's not obscene at all. I mean, it's not anywhere close to the NPV at the spot gold and silver prices. So it feels like you get a lot of margin of safety there, basically. And yeah, this is one I would be much more, comfortable holding than some other silver plays, which might have a trickier, jurisdiction or infrastructure picture, or maybe lower grade, etc. So this is one where, if I had to guess, I think this is gonna become a mine one day. And if that happens, regardless if it's by BlackRock themselves or it gets acquired, I would be kind of surprised, even with added dilution, that it's not going to trade at a higher price than this someday. So I just simply think it's kind of a, you see it as a fire and the forget case, basically, where it's like you don't need really to fear the metal prices at all. It's more down to execution in that case. And at face value, it looks like, again, a quite solid deposit. And who knows, it might grow by 50% or something down the line as well. And then obviously it could become a very outstanding project.
Yeah, and it's very similar to Amex in that they're working on updating their resource at Blackrock Silver, and this drill program, is just about finished. I think it may have actually finished the drilling. They're just getting all the assays back. But once they plug all those in and update the resource, then they can also update their economics because they have initial PEA economics out as well. So it's the same kind of pattern with both Amex and Blackrock, where they're growing the resources. Both of them had an initial knock against their initial resources, and then as they're growing the next batch, I think the market is wising up to just how prolific both areas are for mining, why it's a good jurisdiction, but also how the resources can keep growing and feed into better economics. And then Heliostar as a producer working to develop their bigger projects as well. So a nice mix of companies there from the events you were at. Erik, always great having you on the show to unpack these conferences. Hopefully, you get a little rest in between all of these and get a little downtime. But I know you're getting ready to go on a site visit out to First Nordic, so I guess no rest for the weary. And for those that want to follow along with Erik's adventures in mining and where he's going next, definitely check out thehedgelesshorseman.com. There's a link down in the show notes, and you can follow along with Erik as he reviews the companies on his radar. He also puts out video content on his YouTube channel. So appreciate you being on the KE Report and unpacking the conference in Mallorca, Spain. And as always, looking forward to our next conversation.
The same, and thanks, Chad. Note that I'm an investor in Amex and BlackRock Silver, so consider me biased. Amex is also a banner sponsor, so twice biased there.